So reoccurring revenue is something that really interests me. When we think about some of the best businesses out there, Costco really comes to mind with that reoccurring membership revenue. And so this does remind me of a similar business model to that Costco where they're So welcome back in investors. This video I'm actually pretty excited about. I started to average into two different names here. Both are in the security side. One is cybersecurity, one is home security. So hopefully you guys like and enjoy. Let's get into today's video. The first stock I want to talk about is going to be on the cybersecurity side. That's going to be Akamai Technologies. I was diving into some of these cyber ETFs and saw this name towards the bottom, a low interest point on a lot of these new cyber ETFs, and decided to dig into this one as it's kind of a smaller market cap here, sitting at $14 billion. I believe I got in right around $94, $95 a share. It had this dip here and I started averaging in because when I started to look at the business model, I thought it was pretty interesting as earnings dropped here. As you guys can see from a PE standpoint, it's trading around 29 times. From a forward PE, probably closer to 15, 20 times. And when we look at cybersecurity companies, this seems very, very reasonable. And it's a company that is a low market cap, which means to me that the total addressable market is still competitive. They have a decent amount of revenue here, pushing $4 billion in revenue. And if we kind of compare that to some of the cybersecurity names out there, this is very competitive from a revenue standpoint and a fundamental standpoint. And when we look at the valuation, everything seems pretty reasonable. And when I started digging into the name, I actually liked it more and more. Now, this company IPO'd in 1999, so it's been through the ups and downs. And if we take a look at the nice steady trajectory of revenue growth, this is one of the things I really, really like. Just good steady revenue growth. Company's been around for 20 plus years, and we're starting to see those fundamentals follow those revenue growths. We'd obviously like to see the fundamentals tick up here a little bit more, but we're going to get into what I'm really liking about it. Now, about 10 years ago, they really started focusing in on the cybersecurity side of their business. And when we look at the recent quarterly report, take a look at this. Security revenue was up 14% year over year when adjusted for foreign exchange currencies. Now, they took a big hit on delivery revenues, down 16%, but compute revenues was up 28%. So two aspects of their business are growing pretty rapidly here, and the company's trading at what I think is a fair valuation. When we look at cash equivalents, and total marketable securities, they have $569 million in cash equivalents, $1.1 billion in marketable securities, total current liabilities sitting at $1.9 billion. I think this is a fairly good balance sheet here for a smaller cap type company. Now, what I want to point out is earnings are kind of coming down here. They were doing $2.53 in the 9 months ending the year prior, now doing about $2.40. You can see here they're being responsible when it comes down to share issuance. And what this is coming down to me, is going to be this research and development, $350 million in research and development versus $296 in research and development. So they're spending a lot on research and development, and we're starting to see that get hit a little bit on the EPS side, but nothing too drastic here. When we go through top line revenue growth, we can see here it's not anything eye-opening. They steadily do between 4 and 5% revenue growth, but as I showed you guys here, the two areas that they're growing rapidly should grow margins and should actually grow multiples. When we talk about cybersecurity and computing, those are the two areas that there's high demand, and those are two areas that they're really building a nice footprint. Now, some icing on the cake is a bankruptcy court approves the winning bid for Akamai on Edgio's assets. Akamai is going to be transitioning Edgio's customers to their platform without impacting their business and their end users. They believe that this transaction will add about $9 to $11 million in additional revenue, but expects the transition cost to be about $15 to $17 million in the fourth quarter, which could be a 3 to 5 cent hit. Now, for the full year of 2025, winning this auction, they believe that this transaction will add between 80 to 100 million in revenue, approximately 25 to 30 million of transition costs, and be accretive to the company's earnings by 15 to 20 cents. So when we look at 2025's expectations, trading around 14 times earnings, they could be doing closer to $7 a share, which is why I think there's some value to be unlocked here. So this is a pretty interesting company. I like the fact that they're growing. I like the fact that they're steadily growing. They've been in the sector for an extended period of time, and it seems reasonably priced. So this is why I started averaging in a small position on this company and going to start following more and more. And the more confident I get, I will average into a higher position in this company, but wanted to share this with everybody as I do think this is kind of an interesting setup here. They recently got upgraded by Oppenheimer to a $120 projection, giving it about a 22% upside. Now, the thing I want to point out on the chart here is the price is pretty volatile. We can see here it goes as low as $72 a share and as high as about $130 a share over the last 5 years. years. So it's kind of trading in a middle range here around $95 to $98 a share. Ideally, I think below $95 a share is a pretty good opportunity to be looking at this company, which is now going to lead us to a home security company called ADT. Once again, a smaller cap company trading around $6 billion market cap. And we can see here the prices went as low as $387 and as high as about $12 a share over the last 5 years, down 18% over the last 5 years. Now, my thesis behind this stock is the fact that the housing market has kind of been in some turmoil over the last few years. And so ADT to me is kind of an interesting way to play the housing market. Multiple reasons why I like this company. So let's get into this one. First thing I do want to point out is it's trading at a low multiple, pays a nice little 2.9% dividend that recently was raised about 40%. And when we look at the revenue here, we can see that it's kind of just been flat, sitting around $5.1 billion in revenue. So my thesis behind this one is, as we see a more of an aging population, we see the baby boomers getting older and older, and we see us more reliant on technology. Security is definitely the number one thing we're going to be focused on in an uncertain world. And so I think ADT is positioned really well for two reasons. Number one, if the housing market loosens up and we start seeing these new homes being built, well, I think you're going to want to secure your largest asset, which is your home, and you're going to do that with a home security system. And secondly, I think the aging population is going to be more reliant on these types of companies as well, and people that are more reliant on technology are going to like these types of companies and knowing that their home is safe and secure. Of course, this is just my thesis. That being said, even if the company didn't grow, I still think this is a very interesting company. A few things this company has done. Number one, it's hiked its dividend. Number two, it's adding more cash to the balance sheet, and it paid down a tremendous amount of debt. This was a company that was carrying over $9 billion in debt, now brought the net debt down to about $7.8 billion. So the leverage ratio on the company is sitting around 2.9. So you guys can see here on the promotional material, company's been around for 15 years, number one smart home security provider, and it services about 6.4 million people across the United States. So reoccurring revenue is something that really interests me. When we think about some of the best businesses out there, Costco really comes to mind with that reoccurring membership revenue. And so this does remind me of a similar business model to that Costco, where they're getting that reoccurring revenue of 16% growth, but they're also getting that installation side of the business too. Now, the one area we definitely want to see them growing is going to be this subscriber count. We want that subscriber count growing, more and more people getting on that wheel, more of that passive income, and more of those installations we can kind of see them upsell as well. So this is definitely an area we want to see grow. And why I do think this is kind of stagnant is because the housing market itself is fairly stagnant, and there's a tremendous amount of new builds hitting the market, once again, that I do think could use this type of product. So when we look at where they're projecting out here, they're projecting for 5% revenue growth. It's basically coming in between 4.8 to about 4.9 billion. Adjusted EBITDA is going to grow about 4%, and adjusted EPS is going to grow 21%, with that adjusted free cash flow growing 40%. So more efficiencies taking place with the business. So the thing I want to highlight here is the quarter was not that impressive, only growing 2% on that reoccurring revenue, the service-based revenue. But what got me excited and wanting to kind of start taking a position is not only the valuation in that reoccurring revenue and that dividend growth, but it's the fact that installation shot up 32%. We can see here that they did $126 million of installations, now $166 million, 3 months ending of 2024. And that tells me that we should start seeing more customer growth as these installations are taking place. So in turn, that should impact services to start picking up here, and that'll impact bottom line stronger than 5% revenue growth next year. Now, of course, this is me kind of speculating what I'm seeing in the numbers, but I think overall that makes a lot of sense. So these are two security names I added into the portfolio recently, and definitely would add more into ADT on a substantial dip. I don't think it's a screaming deal at these levels, but I definitely think it's interesting in that $5 to $6 range. So I put a small position in there just so I can follow the stock and keep up with what's going on. And then also Akamai, two companies that I think are getting a little overlooked by the market that have some upside opportunities and that are trading at reasonable valuations in a very expensive market. As always, ladies and gentlemen, appreciate your time, and we will see you all in the next one.